Welcome to the week ahead for a quick wrap-up of the major events and economic releases expected next week. Now, after a heavy week dominated by central bank rate decisions, the coming week is much lighter in terms of economic data. The beginning of the week will see several data reports out of the US, including new home sales, consumer confidence, and US durable goods orders. However, Thursday the 29th and Friday the 30th will be the main days in focus. Friday will mark a busy end to a quiet week with the release of the latest Japanese inflation figures, household spending, and preliminary industrial production data. The Bank of Japan outlined its new strategy for stoking inflation on Wednesday just gone, maintaining its policy rate unchanged at minus 0.1%, yet twisting its asset purchases program in an unexpected way, moving away from its formal policy of quantitative and qualitative monetary easing to introducing the concept of quantitative easing with yield control. Now, some economists are sceptical whether the Bank of Japan's new policy ingredient will suffice to bring a sizable change in Japan's gloomy macroeconomic trend. Although Bank of Japan Governor Kuroda said that Japan is no longer in a deflationary market, the most recent inflation points at minus 0.4% year on year. Morgan Stanley say they have been bullish on the yen for the past year and are now looking for a bottom in the dollar-yen pair between 97 and 100 before heading back up to the 107 mark in 2017. Their base case scenario factors in or assumes a slow rise in dollar-yen over the coming quarters. Looking at dollar-yen's current market price, if the 101.45 resistance is surpassed, they see a rise to 102.50, max 103.05. The US also sees its final release of second quarter GDP on Thursday, as does the UK on Friday. However, the other main focus on Friday will be on Chinese manufacturing PMI data. The Caixin Market China Manufacturing Purchasing Managers Index, a private gauge of nationwide factory activity, weakened to 50 in August. Now, while it's still above the key 50 watershed, the weak PMI figure shows that China's economy is still struggling to gain proper momentum despite the government serving up a raft of stimulus measures in order to try and prop up growth. Last month's readings showed the activity in China's service sector improved in August on the back of new orders picking up. Economic data aside, on the political front, US presidential candidates Hillary Clinton and Donald Trump are gearing up for the first of 3 presidential debates on Monday. Now, the debates are historically very important for the candidates, heavily influencing their running for the top spot. Economists will be watching closely as both US and global markets are poised to react following their election, while analysts say Monday's debate may be a near-term catalyst for US stocks. With the market already pricing in very little Fed tightening over the coming year, analysts at the Bank of Tokyo Mitsubishi believe the scope for further US dollar weakness in the near term should prove modest. As a bearish case, if the 111.75 support is broken, they see the potential for a drop to 111.25, maximum 110.85. Now that's all for the week ahead. Tune back in next week Friday for another edition. But in the meantime, stay up to date with all the latest market news by checking out our analysis section, which can be found at www.lcg.com/analysis. Have a lovely weekend and goodbye.